we are going to be talking about the. Thank you so much, everyone, for joining early. Today is the webinar. I titled it the 12-month wealth reset. So, for people who are members of my community, some of them are in here. I have started this community 5 years ago after COVID, when I left paid employment. When I left 9 to 5. So every employment is paid. And I left 9 to 5, and then so we have been doing this for 5 years. What I, however, always do is do just this kind of webinar once every year. It's only once that I can't actually spare, but once every year, because it's a private community. It's not a community that everyone can join. Not because I'm proud or my community is proud, but because the level of investment you do, if you cannot afford it, it might lead to a lot of frustration. So I have had opportunity to join some groups as well that are way higher than me. So I know how it feels when you join and then somebody's saying, come and do commercial paper of 6 million, 5 million. But nevertheless, if you're aspiring, it's a place to be. So you may not see us or see me advertising vigorously like others, not because I don't need money, but because the level of work and the level of engagement and conversation is high level. Okay, so if you are here, well, I'm grateful that you're here, and then we can start. So the first thing you see now is my presentation. Very short, I can tell you for free, but feel free to ask questions, and it's going to be very practical. So I'm going to ask you to look for a pen and paper because there are some calculations we will do, okay? I hope we are all ready. If you are ready, let me see your emoji, please. I hope we are all ready. Ready. Share some, share this. Okay. Okay. Thank you for that. So, okay, so, this is me. Is it the real me or the AI me? It's me, Sha. At least it looks like me. So I'm an independent consultant in law, finances, financials, business development, and AI. I currently started studying AI. So, I'm big on that, and you'll see how it goes in 2026. But before now, that's all I've done. And I've spent the last 21 years, 20 years out of that. Okay, 15 years out of my 21 years in the banking industry. So I've worked in several banks. As a portfolio manager, I worked in private banking, I worked in retail banking. So what I'm doing now is not new to me. It's not something I'm learning today. And then the other part of my story is that I've known this investment thing, stock trading, treasury bills, since when I was 8 years old. Okay, somebody will say, yes, it's the truth, because my grandfather has been an addict of stock. He was born in the 18th century, and yet he was buying stock as if his life was dependent on it. Handed over to his children, who are my parents, my mom and her siblings. And even in his will, they were still collecting dividend. So I have first-hand experience of stock, more than stockbrokers. I can say that with my full chest. So if I'm talking about investment, just know that you're in the right place. I'm not one of those on the streets of social media who comes up with small research and just give you a hook and then grab all of you and grab your money, and it's not sustainable. So I have experience in it, and in banking, I've also had experience in it. Okay, so you are in good hands that you are here. So talking about the 12-month wealth reset, the first thing we need to talk about is we have done 2025, 2024. How was it for you? Was it good? Did you make enough money? Was it bad? Did you make bad decisions? How exactly was it? Those are the questions you need to ask yourself. So don't feel bad if it was bad. That's the reason why I'm here. That's the reason I'm calling it a reset. Don't feel bad if it was bad. And if it's good, you need to also reset to get more. Okay? Money is very important. There is no way we can undermine that. Okay? And then right now, the best time to take notes and do your reset is first month of the year. That's why we are doing this quickly. I should have done this like first week of January, but I was just like, people are still celebrating. That's why we're doing it now. And then I want to just show you things that you probably may have known them, but you have to see them differently. And also show you things that you may not have known before. Okay? So open your mind and be ready to learn and be ready to also unlearn, as the case may be. Okay? So so the real problem in our day, I just put all the problem in 3 places. The first one is a lot of people save without targets. So I wake up in the morning and I see a message, save because your life depends on it. And then I carry my app, I send 50,000 to my savings account. Tomorrow I go somewhere and people are talking about life after here. I saved so much money. I got people are making money. You go there and send another 50,000 to your savings account. Or maybe you had an event and it was just all about money. You go to your savings account and put some money. You never had a target, no plan within the year, no plan beginning of the year. So that's the number one problem you're going to have, because there's no target. And because of that, you will not get a clear goal. And it's like you're leaving the house, you don't know where you're going, but you are just leaving the house. You are probably going to get to a destination that you did not plan to go. So it leads to a lot of confusion. So we have to stop saving because somebody said so. We have to stop saving because of peer pressure. We have to stop saving because of emotions. From beginning of every year, you have to plan what you want to save. So somebody says to me, Lara, I just save when I have plenty of money. Please leave that for me. I don't save when I don't have money. I save when I don't save. So I say, no, don't do that. When you have 1 million naira, save. When you have 10,000 naira, save. How do you do that? I'm sure all of us have heard the general 50-30-20 rule. So apply it. If 20% of your income or gift or funds, I don't know what kind of job you have, or you're an entrepreneur, or you are not even employed right now, busy housewife that, just get gifts and some money from your spouse or partner, put that ratio in your head. So what I mean now is that I have 10,000. I know that 20% of every money that comes in my hand must go to saving. So I'll pick 20% of that 10,000 and save it. Oh, then there's a day I did a big business. I got 5 million. 20% of that 5 million, please save it. So work with ratio. Don't work with, I have money, I save. I don't have money, I don't save. And then for people who are in paid employment, that means your income is regular and it is predictable. Then you can do yours every month. So say to yourself, from January to December, I'll be saving 100,000 every month. I'll save 1 million naira every month. I will save 500,000 naira every month. Please make it a target. And if possible, if you put it as a standing instruction, something automated on your account, it helps better. You will see the reason why I say make savings your target. Don't just save when you have and you say, I'm not saving when I don't have. We're going to look at the financial plan template. That template, I prepared it passionately, and I'm going to be nice and give everyone here. I will show you how to use it so that you can use it for yourself. Number 2 problem we have is investing without strategy. So people make random choices. Oh, I read in the paper that Tony Melu just took over Seplat. Oh, let me buy Seplat from stock. Oh, I heard about mutual fund from Stanbic as well. Let me just go and do mutual fund. Oh, I heard that the country is looking for money. Treasury bills is out. Let's just go and do it. You know, and so you just keep investing without strategy. No precision. You know, you just have extra money and you think investing is the right thing. That's another problem. The third problem that has become like 80% of the problem of a lot of women and a lot of people in this part of the country is most people don't plan for retirement. Or they say, I'm young now. Why are you talking about retirement? I'm delaying that till later. Oh, I'm just 20. Oh, I'm just 30. Oh, I'm just 40. I'm just 50 now. We live long in our family. We'll talk about that when I'm 70. That is so wrong. When you keep postponing, the risk involved keeps increasing. And all that you need to do while you're in active service, you delay it. So when we say active service, people always think that it's only when you leave 9 to 5. Some people have left 9 to 5 like I've done, and I'm still in active service. I'm still a consultant and I'm still an entrepreneur. So I can't term myself as retired yet. So those are the three problems we need to deal with personally, and we'll deal with them in this class. So the first one I'm going to take us through is the financial plan for this year. That will solve problem 1 and problem 2. Then I will take us through the retirement tracker I also did that will solve problem 3. Okay. Are we together? Are we sure we are ready to do this? Please send me an emoji. Let me see that we are ready. Okay, so the next thing is, let me see if my slide is going to the next place. Okay. Before I share the financial plan tracker, that we all will do a calculation together. The other thing we need to do, step 1, you need to know your wealth number. Let me check the chat box if there's any message that I need to deal with. Okay, thank you so much. Thank you so much. So what do I mean by wealth number? Sorry, that's step 1. So we are all different age groups. Some people here are 30, 35, some are 40, 45, some are 50, 55, some are 55, 60. So what is your wealth number? So your wealth number is that number that represents the amount that you and I need, okay, to achieve financial freedom. Okay, and when we say financial freedom, what freedom means to me is different from what freedom means to you. I've met clients who will say, my own financial freedom is and I see 9 zeros in my account, but they're still working. That's for them financial freedom. Some people will say, my financial freedom is just to move back to my quiet village in my own house. All my children have graduated. I'm just eating fresh fruits and vegetable. I'm living well. That's my financial freedom. Some people believe that, oh, when I relocate to America or Italy and I'm not living in this country, that's their financial freedom. Okay, so whatever your financial freedom may be, you need to know your number, and that will be based on your age as well. Okay, so and it has to be clear. So once it's clear, you can now work with that number to achieve whether it's a plan for the year or plan for 5 years or 10 years or 20 years or retirement plan you are on the journey to, then it will help you to calculate that. Okay, because anytime I say retirement plan, I know sometimes when I have younger audience, they'll say, oh God, Coach Lara, stop it. Retirement is too far. So let's just do 10 years, 20 years, 30 years. You are going to know your number from this session. So I'll take you back there. The next thing is you need to access your time horizon. So what does time horizon mean? So time horizon is actually always the time between where you are now, I'm 48, where you want to be, and how long it will take you to get to your financial freedom. So, and then that means that how long it will take you to get to where your money is supposed to take to. So I'm taking a pen and paper, just like I advised. I hope you all have a pen and paper here. I want us to calculate together. I know it, but it feels personal when you are doing it on your own. What our time horizon is. Who can volunteer our age? What age should we use? Okay, let me use my age. Let me not embarrass anybody because I hear women don't like saying their age. Is it true? Anybody? Is it true that we don't like people to ask? Okay, let me not say people asking for our age. Let me say we don't like publicizing our age. Okay, okay. Can I use 57? Okay, not true. Some people say yes, it's true. So do you have your pen and paper? So write, okay, I will write 48. So you can write your age. Write 48 or 45, whatever you want. What age do you want to retire? Okay. At this rate, I wanted to retire at 50 before. Oh, I'm 49. Oh, chase. See the way I'm cutting my age. So I wanted to retire at 50 before, but 50 is not looking like it. So let me just write 60. So write your current age and the age you want to retire. So if you want to retire 70, 80, that's fine. Okay. So take it out. What do you have? Just type the numbers in the chat box. I have 11 years. Hey, God. So I have 11 more years to retirement, to my own retirement, not the general retirement. So imagine let's even say, because I studied law, let's even say I was a judge, I will have retired at 65 or something. Maybe I should use 65. Maybe it will help me. So 49 minus 65. So let's do that together. Use your current age and the age you want to retire. Have we all done that? 65. 9. So I have 16 years to retirement. Okay. So you got now is your wealth number. You need to pull that number. I mean, sacred. Hold it like an egg that should not fall. And everything you do should be around that number. It's not as if you are going to die, that God forbid. I grant everybody listening to me here by spirit. What we are doing is we want to have a way to know is to know, assess our time horizon. So if you deduct your I'm so sorry about that. I don't know. My network usually does not go off. But anyway, things happen. Sorry. So I was saying that I wanted to check the chat room to check the numbers that we have. Our work numbers. Let me see if the chat is still updated. Okay, some people have 7. One madam say, I have no intention of retiring. Shall put one number? Okay, put 100 years. Put your current age and 100 years. Some people say their work number is 13, some 10, some 60. Okay, no, your work number cannot be 60, sorry. So some say, okay, I get what you did. Okay, so that number that you have, sorry, I have to reshare my screen again. Sorry about that. Can we still hear me? Okay, so that number that you have is your wealth number. From that number, you also need to deduct something. Some people need to deduct, some people don't need to deduct. So the other question is, from that number, how long will it take you to invest to meet your targets? Let me explain to you. So if you say that by retirement, I want to have 100 million, inflation or no inflation, can you get 100 million in 16 years or 10 years? If you can get it before then that's your time horizon for investment. So if you think you can get that 100 million in 5 years and you still have 5 years to retirement, that 5 years is your time horizon. And you have to work all your calculations towards that 5 years. Okay, so all of these things are financial planning. Of course, there's room for God's providence. I know that. But we need to plan so that whatever blessing that God is blessing us with, we add to what we already planned. Okay? They said if you don't plan, you fail. So we need to plan. That's the essence of this session as well. So the next thing I'm going to quickly do is to share the retirement tracker. So we do it together. Number 2 is actually growing your assets with confidence. And then when we do the retirement tracker, we'll go to step 2, which is going to take us to where we should be. Retirement. Is this retirement? Yes. Okay. So if you look at this, can we all see this very well? Resume. Can we all see this?
I'm sorry, no, there are 2 things. One, I don't know if the meeting is still recording when you disconnected and came back. And then secondly, the slides. Can you make it single view instead of dual view? Because the split view is making the slides very small. Thank you.
Thank you so much for that. Thanks. So I'm going to reshare. I think the recording actually stopped. Okay. So that's fine. Let me just how is the screen right now?
It's okay now.
Be better now.
It's okay now, yes.
Thank you.
Okay. Okay. Don't worry. If it doesn't record, it's fine. If it records, it's fine. Okay, so we're going to do this calculation together. Quickly, on this template, what I've done is to put the year we are, 2020, the planning year, and our current age individually. Then the monthly contribution that we should expect. So I'm going to work with months. I know there are entrepreneurs who prefer quarterly or just once in a while, but let this give you an idea, even if you cannot do every month. So there are various investment instruments that I coach people on. Now, to be sincere to you, globally, there are over 60 investment instruments. Here in this country, we are still scratching like 6 to 10, really. But nevertheless, these are the basic ones that I just picked out that everybody is used to. We see on the in the newspaper, we see on the pages of social media. Stocks, which is also called shares. Money market, which is sometimes called mutual funds. Treasury bills, federal government bonds, and savings, which is always a regular savings. So what I've also done here is to put the annual return. That means the interest you get on all of this investment. But what I did here is minimum. Yes, please.
We're looking at step 2, growing assets with confidence, so not the formula you're talking about.
Interesting. Okay, thank you. I'll stop. Thank you so much. And now we start. Retirement. What can you see? Can you see Hold on. Hold on. Okay, now. Okay, now. Okay, somebody. Okay. I think that was me. Determines. Okay, now. Let's put continue sharing. Just give me a minute, please. I don't know. Okay. That is stop the switch. Okay. Okay, Zoom is doing its own. 1 second, please. Stop sharing. Okay, now. Timings. Okay. So 1 second, please. 1 second. We have to share from another platform. I don't know why it's doing this. Give me a second, please. Okay. I don't like when technology behaves this way. Okay. Can you see any Excel sheet that has
Yes.
retirement toolkit? You can. Okay. Is it clear enough? Is it clear enough, please?
Yes, it is. Thanks.
Okay. So what I was saying is that on this retirement toolkit, what I put is current age and retirement age. So for example, if I'm 49, I'm just using you can use yours when I send to you. Retirement age is 65. You will see that once I do that, I click enter, this changes to 16. So assuming that I have stock in my portfolio, which is also called shares, I have money market funds, I have FGM bond, I have treasury bills, I have savings. Assuming that I have all those instruments in my portfolio, okay? You remember I said there are over 60 investment instruments globally. But right now, these are the popular ones in this part of the world, okay? So that is my information as the client. Please stop me wherever you get confused. Then I come here, I show you minimal returns. So when I say minimal returns, I mean that I have factored in inflation, I've removed it. I've removed other occurrences like war in this country, not in this country. What I mean, war in other countries that affect the economy of the world and also affect our economy. I've removed all those scenarios. And I say that this is the worst case scenario. So I'm saying stocks will give you 15% worst case scenario. It's not, I mean, there are times that stocks are giving us 1,000%. There are people in my community here. it's not, I'm not bamboozling you. There are times that we have bought stocks. Is it Fidelity now? I don't want to mention brands, but I will just have to, that we bought at 9 naira. Right now, I think a year after, it became almost 15 naira. At the time we bought O&O at 40 naira, it became 90 something naira. That is beyond 15%. So that time stocks are giving us 200%, 400%, even 1000% in 1 year, in 2 years. Okay. So, but I did not take fact. I didn't do that here. Money market is 10%. Money market pays up to 17%, but I'm just leaving it at 10. FGM pays up to 20%. So this is actually the typical annual returns you will get when things are good and the risk is low. But when things are a bit shaky and then inflation is doing its own, or currencies is doing its own, America is doing its own, and you remember that when America calls, it like affects the whole world, treasury bills and all of that. So this is the, will I call it, allow me to call this percent worst case scenario. So, and that's what I use for this calculation. So assuming that I put 100,000 every month. We are doing with 1 year financial plan. I put stock 100%, 100,000 in stocks. I buy into stocks. I put, let me say I put 300,000 in mutual fund every month. Let me say I put another 100,000 in FGM bond. I put 200 in treasury bills, and I leave 300,000 in my savings. Based on this interest that applies to this instrument, at the end of 1 year, I'll be getting 34 million naira. Inflation has gone out, everything has gone out. Nothing is affecting this 34. That's 1 year. Imagine that stocks was so good the year that I keep putting 100,000 every month. What figure should we use? Let me just use 50%. Did you see that this figure has changed? My 34 is now 153, 159 million. And this is for, okay, sorry, this is a retirement calculator. This is not monthly. We'll go to financial plan. This is retirement calculator. So this calculation is every year. So assuming every year in stocks, I put 100,000. Mutual funds, 300,000. FGM bonds, this is what I get. But it's very unlikely that I'll put 100,000 for all 1 year in stocks. But let me just use, in 1 year, let's say I put 1 million in stocks, and I have 16 years to retire. In another year, for mutual fund, let's say I put 3 million. So please, sorry for that confusion. This is yearly, because we are trying to calculate years to retirement. My own years to retirement is 16 years. In FGM bond, imagine that I put only 1 million, which is impossible for 16 years. Every year. So it's calculating as that. Then I put 2 million, in treasury bills. I'm almost getting to 1.5 billion. Let me go back to the minimal returns, 15. It drops back to 279. But I'm telling you for free, in my experience, this is the worst case scenario you can get. Worst case. But typical annual returns is this, when the going is good. But just to be conservative, I decided to use this. So what I used for this calculation is this. So the question now is, do I have up to 1 million in my stock portfolio right now? Do I have up to 3 million in my money market right now? Do I have up to this in all of this instrument right now? Is a no. Okay? So let me give you an idea of what I may have. Don't go and say anything, because I don't have plenty. I may have. I don't even have FGM bond. Treasury bills, I don't have treasury bills. So imagine this is what I have every year till retirement. I will still be retiring with 70 million. So two things I want us to note from this: consistency and compound interest. And these things can only work in our favor when we are consistent. So don't let any month pass without you putting that money in that investment instrument. You know, in the first slide, we were talking about saving and investing without targets, without precision. You just wake up, you have money you put. The next 6 months, you sleep again. Next, you wake up. No, it doesn't help your compounding interest, especially when you do investment like stocks and money markets, which especially money market that drops interest every day. You get daily interest from money market. And then stock is such that when the companies are good, and that's my own work. That's what I tell new people that are new to stock. Oh, I don't understand stock, so Lara, please leave me out of it. I say, don't worry. The first investment you do in stocks, I will make sure that you invest in what they call the Big 30. So the Big 30 are companies who have been in this business for years. They're not in the business they're in for play. They have been there 30, 40, 50 years. They have proven themselves. So we have those 30 companies in the stock exchange. So if you don't have that risk appetite, I tell you to put your money there and just be regular. So the key here is that be consistent. Is it 50,000 you want to do every month? At the end of 1 year, you'll have done, is it 600,000? Be consistent. If it's 10,000, be consistent. If you want 1 million, be consistent. That is what makes compound interest work in your favor. And remember that I said that this return is minimal. Do we have any question? So by when I'm 65, I'll be having 73 million, which is, I've already factored in inflation. Don't forget. So don't come here and say, what about inflation? It will drop. I've already factored in inflation because this is what the interest should have been. Yes, go ahead, please. Somebody is raising a hand. You have a question.
Everyone.
Good evening.
Good evening, Coach Lara.
Yes,
I'm
please.
sorry I don't know if
I can hardly hear you.
Can you hear me now?
Yes, better now.
Okay, I said I'm sorry I joined late. I don't know if this has been treated before I joined. But this investment doesn't mean that while investing, the dates you can take out your money is fixed, or you can decide to take it out anytime.
Okay, if I hear you well, they are saying that if you're investing and you want to take out your money, you can take it out anytime.
Yes.
Oh, yes. And you know, that's why the community is good. I will show you how to invest in stock by yourself on your own phone. So gone are the days where our fathers used to buy shares for us. They will fill a paper, they will post the certificate to their box. We'll go and collect certificates, we'll fill this. No, those things. Brokers are now on the app. So broking firms are now on the app, on the phone. So there are three benchmarks I use for my community so that we don't lose money. Now, number one, the broking firm we use must have been in business for more than a decade. In fact, 2 decades. Number two, they must have a physical office that anybody can walk into if you have issue. Not that you have an issue, there's no physical office, you are calling, nobody's answering you. Number three, their app must be user-friendly. So we have broking firms that meet that criteria. So I'll teach you how to buy stocks. When I'm not there, you sell it on your own if you want to sell. So it's now so free that nobody has an excuse anymore. Stanbic has an app as well. I'll teach you how to buy mutual funds. If you need money, you can remove it. You can put it back. You can remove it. So are all of this investment as well. So life is now good. You can do as you want with your money. Okay? Any other question?
Thank you.
Okay, I want to also go through the okay, I need to open that now. Give me a second. I want us to quickly go through the financial plan for the year. So what that will show us is how we need to run this 2026 without fear. So all of these things, don't let your heart be troubled though. We shall overcome. It gives us an idea because for example, I like to plan. It's not just because I'm a coach. I believe that when you have a plan in place, you are able to follow through. And the good thing about the community is even when you are when you're kind of forgetting your plan, somebody will ginger you. It gives you accountability. Somebody is saying something that's, oh, then you remember, oh, my 50,000 this month, oh, I've not dropped it. So those are the two things that are really very important. You have a plan, yes. Fantastic if you have a plan. But when you have a plan, you also need to have people who can help you with the plan. Okay, so that's one of the good things about a community. So let me just open the financial plan tracker for the year. Please let me know if you can see it. Financial plan for the year. Okay. Okay now. Stop sharing. Start sharing. Mm. Can we see the financial plan? Okay. I can see it. Let me know if you can see it. Okay, so this one. Can we see the financial plan? There's a new Excel I just opened. It's a tracker for financial plan. So this one is just for this year. So because it's for 1 year, whatever we are discussing will be monthly. Then if you are prone to do quarterly, then you see how it works too. For monthly, we give you a basis of what we are talking about. So I did planning year 2026, current age 40. So this is just for Excel's sake. These two, planning year and current age, does not affect the calculation. Okay. So we are still using the same. We're still going to be using the same investment instruments, stocks, mutual funds, FGM bond, treasury bills, and savings. And I'm still using the minimal annual returns. Okay. So imagine that we save 50,000 every month on stock. Let me even do 50,000 for everything every month. And let's see whether let's see what we get by end of 2026, by December 2026. So let's just call it what it is. So that means every month you have earmarked 250,000 from your income. Then you spread it out. In the community, I also teach us diversification. So the essence of diversification is to reduce risk. So don't just put all your money in stocks and leave the rest. It's like putting all your money in one basket in a layman's term. So we put 50,000 every month, January, February, March, April, May, June, July. And then you are put 3 million at the end of December. You are going to be having 3.1 million. That is very small. Okay. Nevertheless, what has happened is, like I told you, I use the minimum annual returns. If I show you the returns, especially what stocks is doing right now, because as of last year, MTN was 250. 3 months after, MTN is now 650. So that's almost like 300% on one single stock. Do you understand it? So imagine that I just want to be realistic and say the madness and the prosperity that stocks is giving us now is giving us 200% this year. Did you notice that this 3.1 changed to 4.1? Imagine that I just picked the highest that mutual fund is giving us, 17. It has changed again. I picked the highest that treasury bills are giving us, 17. I picked the highest for FGM bond, 20. Can you see the numbers are changing? And let's just leave savings as 5%. Some people still get 12% for saving, 10%. At the end of the year, you are going home with an extra 1.1 million. And of course, these are not the only investment that you have. I did not factor in landed property that some people have. That will also amount to the increase. I did not also factor in stocks in US dollars. There are stocks in US dollars that are growing like every day. I did not factor in. So those two are even a plus to this financial plan tracker. So if you put your mind to what you want to do this year, 50,000 every month, 1 million every month, what else? What exactly do I want? Okay, I have 1 million every month. I spread it to stock, mutual fund, FGM bond, and then this is what I come up with. So at the end of the year, your 3 million is now 6 million. Imagine your stocks even grew by 1,000%. Yes, we have gotten stocks before that became 1,000%. You are going home with 8.9 million. There's no exaggeration. It's something that has happened before. And it's still happening. In fact, this fourth quarter is going to be mad. Sorry, excuse my French. That's why I always encourage people, if you want to start this investment thing, start it now. If you want to quickly chop money, chop it before March. And then you start the long term. If it's the short term, just start January to March. Chop the money. I have people that with their stock, the money they made, they went to buy land. And that was how they were growing, and then they started growing it again. Take your profit, chop the money the way you want to chop it, then continue for another long time. So you can do both short term and long term. Any question? Okay. Let me see the chat box. Oh, yes. Everybody that is here will share the Excel for the retirement and the financial plan. Okay. Let me see if I can still see my slide though. First. Okay, can we see my slide? Are we back? Okay, so this is where we were talking about growing assets with confidence. So if it's growing assets, when we say track your cash flow, we mean that the way money is coming in and going out, track it. Don't be a stranger to your cash flow. A lot of people are strangers to their cash flow. Go and ask for your 1 year statement of account. Last year, sit down with it. Look at all the debits. Look at all the credits. Plan if you have like 200 debits for the year and you have 5 credits. It's not about the credits, it's about the amount. Plan to have more credits in the new year. But if you don't see it physically, you will not even think it's something to track. And some people felt that they were so poor last year. When they see their statement, they'll be amazed at the kind of money that passed through their hand. It's not money that passed through their hand to somebody else. The money that passed through their hand, that's their own. I do that every year. One thing it helps me to do is to thank God first and then to plan for the new year. Make it an habit. Request for it. They'll print it out. You just pay. I can't remember how much it's bank. Print it out. If you don't want hard copy, sometimes I like hard copy so I can underline and asterisks. If you want soft copy, they will send it to you. Track. That will even show you your spending pattern. I was telling somebody that, okay, so it was one of my Gen Z friends, very young friend. I said I buy data per year when I have the money. She said, that's too much money, ma'am. Me, I just buy 500 every week. So me and her sat down, calculate her 500 every week for 1 year. I realized she was spending 220,000 on data, and me, I was spending 100,000. The shock on her face was too much. Because there's a plan for 1 year on MTN now that is 100,000 and it's like 1 GB. There's no amount of data you use that you finish it. But because you were like, no, 100,000 is a lot. And I sat down and said, yeah, let's calculate your 500 naira now, or your 1,000 every week. She was spending double what I was spending. So we need to do this thing. Track your cash flow. Invest consistently. If you work with this tracker, you'll be happy at the end of December. I can tell you for free. Work with it, and life happens. So it will be good for you to join the community so that we can keep at each other. And then review and rebalancing is also very important. You have to review. I do review. I used to do review 4 times a year in my community. So I look at your portfolio, what's going on, what has dropped, what have you withdrawn, did you not withdraw, put your money here, this is selling, put it here. So that's my own work as the coach. This year, I'm going to be doing it twice a year because a lot of people are coming in, so I need to spend more time with each person. So you have to do review and rebalancing. It's part of what rich people do if you think you're not rich. But by the time you see your statement, I can tell you for free that you're very rich. It's part of the lifestyle of the rich. You have to rebalance, you have to review your finances. So start that lifestyle. Let me not talk too much. So when you join the community and become a part of us, this community is for middle income and high net worth, professionals, entrepreneurs, women who want structure to their finances, and women who are ready to build wealth. And then what do you get? You get a personalized wealth planning. There's group coaching, and there's also one-on-one coaching, depending on the plan you pick. I give you templates. There's weekly recommendation. What I mean by weekly recommendation is, oh, this is what we should buy now. Because of my expertise and my network of financial institutions, I have news that I get before they come into the news. These are not insider information, please. News that come to me before it gets into the public. And then we can take position and I share it. I don't hide anything. I share it so that everybody can grow. I like to grow people's money as if it's my own. I don't just appear on social media and post something. And then the next thing I'm asking you, did your money grow? No. If your money is not growing, I should be able to explain to you. And then we base it on risk profile. If you are not an aggressive investor, what I mean is that some people, they can invest 1 million today and lose it all tomorrow, and there's no shaking. Some people can invest 100,000 today and lose it tomorrow, and they will land in the hospital. So everybody has their risk profile, and that's how I base my coaching on that. So I will never tell you to invest in something that is for somebody with the high aggressive appetite when you are conservative. Okay. Yeah, there's private district community, direct access to me, weekly investment recommendation on all the investment. So I teach you. The first 1 week is training. How to buy, how to sell. Ask your question with me. It's not a crowded thing. Foolish question, right question. There's no foolish question. So you are free to ask me anything. Then I also give you a hard copy of my book. So this is how the package looks like. So people have been asking me that, 1 year is too long. So I said, okay, let me create a 6-month group. So in 6 months, you get group coaching and all that I listed there. But for 1 year, for 6 months, you won't get one-on-one. The only one-on-one you get is when you join at first. You will not get weekly recommendation of investment to be monthly. You will not get a lot of things. You will not get some things here that is different from the 1 year. But for 1 year, you get everything. You get almost everything that you need to get. So weekly recommendation, I show you the stocks to buy for that week. I show you the treasury bills to buy. When there's a new stock that is coming up, like now, Dangote Refinery is going to go public by April. We're already planning for it. People are putting money together. There's some banks now that are able to meet their capitalization. Those are the ones we are buying. The ones that are not meeting it, We are selling them off quickly so that we don't lose money. So all those quick decisions is only in the community you can get that. So when you hear people say, but my father put money 10 years ago, he lost it all. Did he get a recommendation? Was he told to sell it when he was supposed to sell it? Or did he just leave it? That does not happen in the community. The truth is you can actually invest in stocks and not lose money. Yes, I say it with confidence. If you follow recommendations as should be. And when I say recommendation, you need to join people that know what's up. I've been in that system for years. I know what's going on. Don't just follow recommendation as somebody sending to you. Oh, yeah, sell. You rush and sell. Sometimes your stock will drop. It's not a time to sell. I will tell you, don't worry, just be patient. If it's worrisome, I will tell you ahead, sell. So there are times like that. So it's not all the time that it drops that I say, oh, sell. So that's basically about the community. And that's what we do. And that's how we have been making money. So if you see that we are so quiet, it's because a lot of money is being made. I'll not lie to you about that. And then they said empty barrel make the loudest noise. We don't even have strength to make noise. Okay, so that's how we have been working in the community. I'm asking you to join us as early as you can. And then let me show you how. Let me teach you how. The good thing is that even if you join for 6 months or you join for 1 year, a lot of members that I have been with us for 2, 3, 4 years. Even if you decide to say, oh, I just want to join for 1 year, the knowledge that you have gained, I cannot take it from you. It will still be with you and you can still do what you want to do with it. Okay? So the floor is open for questions, for statement, for if you want to add anything to what I've said. And if you had any experience before that you did not like, we can talk about it. And so the floor is open. I'm also going to share the tracker, and then I'll share the payment link if you want to join right away. So I'm giving like a 10% discount till end of January. Okay, Ma, you said how much is the minimum one can invest? Invest in what, Ma? Is it the community or a particular investment? Let me know what you mean. So I'm giving 10% discount till end of the month for whoever wants to join both the either the 6 months or the 1 year. And I'm also sharing the payment link if you want to pay now to join. Okay, the investment tools. So like I said, it depends on when you want to. If you are looking at for 1 year, what would make sense? If you have all the tools, stocks, mutual fund, FGM bond, treasury bills, and savings. At least if you want, it depends on what you want. Because somebody that saves 100,000 every month will not get as much as somebody that saves 200,000, 500,000. But I'm not of the school of thought that says start small with 10,000. If you start stocks with 10,000, what exactly will you get? Even dividends will be like 3 naira. That's far cry from where you're going to. So I'll always say start with 100,000 and then grow. That's my own logic. Yes, ma'am, please, you have a question. Go ahead.
So let's assume that I want to start in January and I start with 100,000. You talk about consistency. Does it mean that along the line I can increase as the year is going on?
Yes, you can increase. For consistency is that if you plan that is every month, make it every month. That something must go into that investment. If it's every quarter, be consistent. Every quarter, something must go into that investment. If it's twice a year, be consistent. I don't want to say it works like algorithm, but it is.
Okay. Peradventure, if along the line I got like bulk money that I want to invest, can I still put it?
Okay, so if you got a bulk money, what I will now help you do is to divide it into all those stocks, all those investment instruments, so that you can spread your risk, and then you put it. Then if another 6 months you have bulk money again, you put it. But don't just leave your portfolio for 1 year, 2 years. The only time you have put is 2023, and then you wake up in 2025. It doesn't help like that. But for people that want to do monthly, I will encourage you always put something every month. Okay? Any more questions? I'm open to questions. Okay, let me check the chat box if there's any more question. Okay. So I encourage you to join us so that we can make money together. And then I will show you. So by the time you have done, let me even say 3 months, you've either made triple of your money that you invested, and then you will have learned how it works. Yes, you'll have learned how it works. So, like I said, 6 months is 150. You have 10% discount for now. Then 1 year is 300. You have 10% discount. For the next, is it 2 weeks? Okay, till 31st of January. So let me type it out. 6 months membership is 150. 1 year membership is 300. So the discount applies, it's already imputed in the link, and then you just put your discount code. So I will send you an email with all the details. The discount code for 6 months is 6. The discount code for 1 year is reset. So you can join immediately as soon as you are ready. Yes, the membership payment is every year. So if you have done, so depending on when you want to pay, if you pay 31st of January, so it will expire 31st of January of 2027. If you pay today, to expire January 2027. If you pay in February, to expire February 2027. Yes, so it's a yearly payment. And then every year, you learn, you make money, you get new recommendations. As everything is happening in the economy, you get new opportunities. Right now, we're also investing in properties in the UK and Kenya. So there are lots in stock. There's a lot in stock. So I would like you to process that. I'll send you all the information that you need. If you also want to chat me on WhatsApp, I'm available. And then if you want to send an email as well, this is my email address. So it's time to put your finances in order and know that there's a lot of money to be made. So when people, I say a lot of people in Nigeria, would say, oh, things are happening. And you see people beside you that are keeping quiet. You be like, you're not a politician. You're not I don't want to use the other word. How are you making money? So just be quiet. You don't know what's going on. So it's time to know what's going on. And you have to invest into it. Okay? Because there's a lot of knowledge that is being passed across. So I want to thank you for coming for this session. Okay, my WhatsApp number. Okay, let me share the. So I want to thank you for coming for this session, and I hope and pray that this year will be good for all of us, and then we can all make money together.